Hello guys, welcome to the Trading Parrot. Yesterday we had the FOMC meeting and the rates were left untouched. We had a tiny bit of volatility and we came back to the same range, but we still don't see the volatility that is forming within the squeeze where we are. As you can see on the Bollinger band, we are at the tightest level and there are some additional signals that are hinting towards extreme levels of volatility that hasn't happened yet. In today's video, we're going to continue to look into the liquidation levels, order book, and any clues about directional moves. I'm gonna give you my take on the events on the FOMC and my analysis, look into general markets and all of that. Remember that there are always timestamps in the description if you want to skip to something that is really attractive to you. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in the earliest video in the morning? That could really help attract new viewers into the channel. It's a win-win after all. And later on today, in just a couple of hours, we're gonna have the second PineScript workshop. All elite Patreon members can join, and there's currently a poll going on asking them what do we want to cover today. I think we're gonna end up going for basic introduction to PineScript strategy implementation, and I might have some time to show you how to do that as well on Freq Trade, which is a much more professional and technical way of doing backtesting that also involves doing optimization using Python. If this is something that might interest you, if you are on the techie side, we do these sessions once a month. Elite members get all the other weeks private TA sessions as well, so there is value from both ends. So I like this post from Highblock Capital because it's summarizing pretty clear what happened yesterday. Part of this we spotted in the video in the morning yesterday. FOMC announcement today revealed key shifts via Highblock data. Pre-FOMC order books hint at a changing market positioning. We talk about that precisely in the morning as we were approaching the FOMC meeting. The bid-ask ratio, the 10% depth flashed red with large ask imbalances. We noticed that all this cloud that initially I thought it was gone, no, we scroll up and we found that only they move it into 121. But price didn't want to go into it after the FOMC announcement of not rate cuts. Instead of that, the price started dumping into 115,700. FOMC, a classic indecision 15-minute candle emerged with wicks on both sides as wick wavered. Order book dynamics and liquidity remain largely unchanged. And then post-FOMC meeting, price crash, hitting the 115,883 liquidation level precisely. That is the liquidation level that was located around there. The order books show the bearish bias and the liquidity level show the target. We're gonna look into where are the next levels of liquidations to the upside as well later in the video, in case the price continues going higher, assuming that we stay for a little bit longer within that ranging period where we are. Martin is pointing out that the open interest has increased by 1.3 billion in minutes. This is starting from 8 p.m. yesterday. If we go to my aggregated open interest chart in here, you're gonna see what they mean. This is the aggregated open interest across all the bull market, starting from the lows of 6 billion only from the bottom of the bear market. And now we are trading at over 41 billion in open interest. And if you look carefully, we are about to cross that all-time high of aggregated open interest with the price ranging. That is the perfect recipe together with what this post says in here about the Bollinger band squeeze, which is calling for volatility. Remember that on the CPR model, last month we said that we are due for having a squeeze, and the CPR confirmed that by squashing the levels into a way tighter range, and the price action of July is not helping to relieve that squeeze. It's actually contributing to that potential explosion of volatility still incoming. Why? Because all we have done is test the pivots, go to the second level of resistance, and spend the whole month within a very tight range. That means that the next month, probably, unless we change that in the next few hours, because we are in the last day of the month, we're gonna get new CPI CPR levels tomorrow, and probably they're gonna be even tighter than July, calling for way bigger volatility than what July was already calling for. Basically, July called for volatility and we didn't get it. And the increase to all-time highs in open interest together with the squeeze of the Bollinger Band with the CPR, everything is aligning towards that explosion. Using over 5x leverage means you are exponentially more likely to get liquidated within 24 hours. Bitcoin moved more than 2% on most days, 82% this month. If you play 50x Russian roulette every day, the chance of surviving a week is only 0.000612%. The funny part is I get all the time people telling me, oh, you're only going with a 3x? What a chicken! Every day I use 50, 100x. I would have expected more from you, Trading Parrot. Well, I have to say the opposite. The chances are that those people that are commenting are getting wrecked constantly. Funny part is that they usually come in, they leave a comment like that, and they never come back again. That's because they don't last longer than a week. Here you can see a 50x liquidation. Pretty much you are constantly being liquidated. If you are at 3x, you can see that the liquidations are, every now and then they get completely squashed, and even the 2x, sometimes they get destroyed too. And now that we are calling for the squeeze, be mindful of what sort of leverage you really want to use as we approach the end of the squeeze. You can only strangle the price for long enough. Eventually the price will punch you in the face, and it's up to you whether you want to be very close to the punch or a little bit behind and wait for the fist to pass. Total unrealized profit of all BTC holders hit a new all-time high of 1.4 trillion. This massive paper gain concentration sets the stage for potential future distribution pressure if price continues higher. It's basically everybody in profit and price starts going into the all-time high, and everybody has in their head, well, at some point I need to take profits, and you have already the long-term holders distributing. It is very typical that when you see everybody in the green holding a greenback against resistance, that you start seeing a little bit of distribution going on. According to Grok, there was no official announcement of any incoming rate cuts on September, which I find very interesting because I couldn't actually watch the event yesterday, and I remember seeing on my Twitter timeline some people saying, oh, they are calling for a rate cut of 25 basis points coming in on September. But apparently, according to Grok, that is not the case. If you watch the event, let me know if you have any source that you can trust that they actually say is coming. The rates were left untouched for the fifth straight meeting. Powell stressed that any future adjustments will be data dependent, and investors trimmed the odds of a September cut to below 50% after the meeting. Nonetheless, economists such as Kathy Bosniak still forecast a likely rate cut at the mid-September meeting. These are the odds of an ease, which are currently around 63.8. We're talking about September, and in October is looking a little bit like this. Actually, in September is 41% if I properly refresh. No change is 60%, and in October is 63.7. So I think it's a little bit shifting more towards October after the meeting. In terms of tariffs, the statement and Powell's remarks flag the uncertainty but potential persistent inflationary impact on higher tariffs. And since yesterday we got a new round of tariffs announced, he noted that while tariffs have begun to show through to some customer prices, the overall effects on economy activity and inflation remain to be seen and could be transitory or lasting. Inflation remains above the Fed's 2% objective, about 2.5 in June, and is expected to finish the year near 3%. The committee reaffirmed its commitment to returning to inflation 2%. So as long as Powell and the team are seeing the inflation a little bit more sticky, that's why the public is starting to think that maybe September is not the case, maybe October. But of course, this is not something that Trump is gonna like, and he might come up with some tricky alternatives to change the mind of the Fed if the Fed is still here by then. Just saying. And implications for cryptocurrencies, the short-term outlook. With no immediate rate cut and real yields elevated, risk assets assets, including digital currencies, may face downward pressure as capital rotates towards higher yielding instruments. And that gives a Bitcoin 3 out of 10 bullish and altcoins a 2 out of 10. This is just based on public. Basically, ChatGPT is just reading out there everywhere sources of news and comments in social media, and this is the perception. This is not necessarily a forecast, and it doesn't necessarily reflect what I think is going to happen. In the medium-term outlook, as markets price in a September rate cut and persistent inflation fears rise, demand for alternative sources might strengthen. Maybe Bitcoin is going to start looking better. Bitcoin and altcoins 7 out of 10. The week is still busy. We have a couple of more events coming in. One is very soon, the PCE, the personal income and spending, and tomorrow we have the unemployment rate as well and the PMI. Yesterday I was very excited with this week down here at our sub 116k is where I started thinking to hedge with the long. I mentioned as well with my Patreon community that we were right at support on the 4-hour. At some point, this candle on the RSI was perfectly testing the 34. That was intra-candle, but of course the candle ended up closing higher. But you can see here how is on the reverse RSI testing perfectly the 34.32. So we did touch our global support on the RSI 4-hour. Remember, I mentioned that the only levels I care on the 4-hour so far is 34.32 because it's global support and global resistance at 83.10, currently priced at 128.7. Why? Because there is a lot of noise in here since 14th of July up until 31st of July. So that means 2 full weeks where the average of the 4-hour RSI pretty much remains flat. It's not going anywhere. It just goes up, pretending a breakout, comes back down, up and down, up and down, up and down at a level of 50, which is neutral. Something to note is that this is a higher low relative to that, and it forms a double bottom, and we are right there at resistance on the 4-hour. If you still want to trust all this noisy RSI 4-hour, that will be the reading at the moment. Now, if we break out, of course, we get a layer 2, 3, or 4 this time of a breakout in this direction. The first breakouts were happening around here, the second here, third, fourth, and we could get a wave fifth. But at the same time, if that fakes out, that could form another fake out like this, and we can continue forever and ever going just around the RSI 50 and the price of 118k, which is still our point of control right around there. We continue to just go below it and come back to it. We didn't take the previous week low. I was expecting to get a little bit of a shake around here to close fair value gaps, to close the CME gap that we still have in there, and to take this big liquidation level. Instead of that, we just took the peanuts that were located at 116. So as you can see, we just sideways around this area, not going to any direction. We're going to have to look now into the order book to see how they are positioned relative to these pools. So keep in your mind 115 heavy, actually it's 114.2, and then the center of this is 122. Remember that all of these charts are up to date by the minute in my Telegram channel. You can always on any post I'm making hit TTP charts, and then you can request via Telegram any of my BTC, altcoins, or general market charts. In terms of news, I have in here spot Bitcoin ETFs log 779 net inflow led by BlackRock. And a UK listed smarter web company buys 325 Bitcoin. That is moderately bullish. And BitLawyer's BitVM bridge goes live, unlocking trust minimize BTC DeFi. New bridge lets holders deploy BTC in DeFi for yield, depending on on-chain demand and reducing reliance on custodial wrap tokens. That is pretty cool as a functionality. Let's go and see if there's any Bitcoin status changes. The 4-hour is starting to gain a little bit of momentum. Even though it's just going sideways, we can see see a new breakout with a formation of that double bottom. It's a noisy, low quality gaining of momentum, but it's appearing right there. On the daily, we continue with the bullish consolidation. Let's go into that chart as well. You can see how the CPR is just crazy. It holds and holds and holds and holds every single time. 117,500. What a level for the CPR. And yes, on the daily, let's continue with the thesis from yesterday. We say that we have an option 1, which is maybe we get a breakout from earlier, halfway through coming back down from that level of 60, or if we reset, which is my personal preference, not forecast, to go into the 43 and from there to do a more clean and higher quality breakout into top of the range. You can see that with the move down in here, we move into 57 by candle close, and currently we are kind of approaching the daily resistance, which is at 61 RSI. That's probably priced at around 119, 120. That is definitely the daily resistance. If that rejects the price, of course, we could get another one of these small waves down in this manner. The longer we do that, in my opinion, the better the breakout we could get once we get to the bottom. But if Bitcoin wanted to break out from there, of course, what we need to do now is to break above 120. The consequence of doing it too early could be a diminished quality around this area, right? So we could see maybe a move like this, and there is a chance that we just put a double top on the daily RSI, and from there, that's it, and we don't manage really to get into the actual top of the range. The more we consolidate within this channel and then break out, the higher chances we have to really reach the top of the range by fully resetting the momentum. It's like a spring. Imagine a spring. If you compress it to the very end, maybe you're gonna hit 2 meters high, but if you just compress it halfway through, maybe you just jump 1 meter and you don't hit your final destination. One reason that this might break out from now is the enormous amount of open interest and that very tight squeeze Bollinger band. So don't take my preference as the forecast, because this pressure pan might explode now. And also, don't take for granted necessarily that the bullish consolidation must break out to the upside, even though there is a bias around here thanks to the price action that the breakout is gonna be to the upside. Well, maybe we do it like this and then break down, or we just do a small wick up and then we fail and we go straight back down. I mean, the chances are volatility is around the corner, and I mean maybe 1-2 weeks for breakout, or maybe just a few hours, or maybe just a few days. But stay away from high leverage is my recommendation, unless you want to land next week with your picture in big here being one of the biggest contributors to longs or shorts liquidations of over 1 billion in a single day. If you want to be a trader for longer than just 1 week, like all these Degens that leave comments and never come back, think about capital preservation first. Keep your capital is your focus rather than make me rich in 1 minute. And here is another alpha I'm gonna share with you guys. We are hitting the lower band of leverage squeeze. That means that we are about to get one LS2. We might not get it if we start bouncing from here like that, because the signal only triggers if we cross the percentile. But since we are so close to the line and we are already bouncing, you got already the alpha fresh. This is similar to having been in this area, and probably at the time that we pinched that, the price was sub 16k yesterday. We have already bounced into the middle of the range, but you can see that we remain at very low levels of longs at the moment. And since this indicator calls for squeeze, that means that there is a potential short squeeze like this one in here coming in from those extremes, in this case of too many shorts. Since it's calling for too many shorts, we're gonna have to look into the order book and liquidation pools to quantify that as well. And here is another alpha, not necessarily for short-term trading, but look at these levels of the hash rate. Let's focus on these depressions in here. Every time that you hit the lower percentile that I'm tracking in here, following right underneath the hash rate of the blockchain for Bitcoin, that means that miners have reduced their processing of hash rate, and that is usually associated to them having to switch off some proportion significant of machines. And the last time we did that was on the 24th of June. At that point, that depression in the hash rate ended up triggering a capitulation signal. Each one we get a P in here is a time where the hash rate has decreased significantly. And as you can observe in the history of Bitcoin, that comes usually with price taking a dip. The price kind of historically follows the hash rate in a way. The hash rate comes down and the price takes a dip and there is a capitulation, but not always. And instead of using the capitulation and the buy signal from the official hash ribbon indicator that is being used for almost 10 years maybe, what I'm doing is I'm directly tracking the percentile lowest on the hash rate, and every time that we pinch that, I put a P in the chart, and that allows me to find opportunities, right? For example, this one, the hash rate came down with the price coming down, and I trade it as a opportunity because eventually it will recover. Based on that premise, of course, if it doesn't recover, then you're screwed. But you can see that more often than not, when price comes down with hash rate going down, eventually we recover, and we recover big. Or in the bear market, we also had the hash rate dropping. As soon as we did that, then you get that signal of the quick recovery there way before the buy, because the buy of the hash ribbons comes out too late, in my opinion. In here, you can see it as well, and that is in the bear market, and that moves up 37% within the bear market, or halfway through in 2021, that 150% during the hash rate being very low is also a pretty cool signal. And even at the top of the previous cycle, you get a 21% from this correction within the top. So that is pretty good because you could trail this and still get stop out in profit at the top. So don't underestimate how you can trade the hash rate on Bitcoin network. So now we are pinching that level and we are below it. So if this line of hash rate by tomorrow on in a couple of days crosses back up, we're gonna get a P somewhere in here. Ideally, if that happens with the price having taken a small dip and the hash rate takes a dip, then we get checkbox and checkbox for a potential decent trade to take. I will keep you informed, of course. First, my Patreon members get informed about these things, and second, on Telegram, Instagram, and Twitter, and third, in the updates in the video. So you pick which one works better for you. And the futures, longs, short liquidation dominance, you can see that we are now flipping from the very low levels, which means that we were in a season of liquidating shorts constantly. Now the reading is at -11, coming up from -26, which was the lowest reading in the whole cycle. That means that that season of liquidating shorts was very, very intense and unexpected for those shorts, even more than what we saw in the beginning of the bull market, where we did a -24. So now with a reading, let me see, the proper reading is -97. So we are on our way to get into the green potentially. More often than not, when we get so overextended, then we initiate an area where preferably we liquidate more longs than shorts. We'll see if statistics and past performance is any indicative. And on the ETF side, we have seen a slowdown in the inflows, both for BTC and Ethereum. Nothing to be really on a red alert, but just note that this is just 47 and is quite the smallest positive inflow that we have in multiple weeks. And the same applies for Ethereum. This was just 5.8 with some outflows in here on Fidelity that managed to reduce the total. Grayscale has 7.8, BlackRock was in the positive, but Fidelity was responsible for slowing down for the day. If you look back in time, we don't have any reading on Ethereum that low. We are in grid at 72, and I wanted to show you something different, a different perspective of the longer term liquidation levels today, because every day we look at this in this way and it's so obvious, well, there is the level 2, it's so interesting and blah blah blah, but that is incorporating all sizes of leverage. It's always good to go first looking into the Degens. Those those are the ones that get liquidated the faster and the more often. So let's set up the trading different view to just track complete Degens, 25x and larger. So I'm gonna also do it with the profile in here, just leaving the 25x's, and we're gonna focus on what do we have right next to the price in the long-term accumulation. We have 114,200 and we have 122. Guys, no surprises. Those are the two levels, and the price is right there in the median, slightly above the point of control at 118.6. Point of control is more or less 117.5, 118, depending on the 4-hour or daily. And a move down to liquidate all of this at the moment is 4.5k. A move up to liquidate all of this is 3.6k. So it's at the moment closer to the price. Well, we've been fluctuating, we've been very close, we've been very far, and still we go back into the median. But those levels, you need to keep them in mind because you don't want to be adding to the fire of one of these two levels. It is very likely, in my opinion, that one is going to get taken out pretty soon, preferably both of them to make a decent move. If we add 10x, things don't change that much. If we add 5x, we start seeing a little bit more on the top end. If we add 3x, that is where this 125 becomes really heavy, and also the profile around here confirms that as well. Still, if we use all the different leverages, we still have 122 and 114, the most decent levels next to the price. Going into liquidation map, we can see that we still have this up until 122, accumulating almost $8 billion. And now if we go lower, this is 3.5k up, 8 billion, 3.5k down, that should be 115 if I get it right. That's just 2.64 billion. So there is very little at 3.5. Really, price needs to move to around 113 to take an equivalent amount of liquidation levels compared to the upside. That is where we can get 8 billion plus liquidated. And probably that is because in the past few days we've been liquidating a decent amount of longs. Remember that the oscillator moved from -26 into only -9. So we have done a lot of progress liquidating longs as we were expecting after hitting -26. Order book. Yesterday we made this analysis. We say all the bands are going up. What happens? One of them needs to pull out. Which one is the most likely to do that? Well, purple whales. Those are the ones that know what to do. Those are the ones that get wrecked the least. And we were all going up, and guess who managed to take profits and who got wrecked? Purple whales. They pull out, they rack pull, and at the moment they rack pull, the price reached the top and it started collapsing into sub 116. At that point, probably all these guys were underwater. Interestingly, I see that they are still aggressively buying. So they are adding to their positions. The green, the brown is just going sideways. Very interesting as they approach now the immediate resistance. Let's have a look at how big is that resistance. We have 43 million at 119. We have 45 million at 120, and then we have the 125 with 48 million. Interesting that the order book looks a little bit less heavy. We were talking about 70 millions if I remember right yesterday. Now we have kind of half of that. And the order book that moved yesterday up remains around that area, and we got this support that came in at 115, marking the low, and we have some new levels developing at 110 into 111. This one in particular is pretty heavy. Notice that the heat map now on Market Monkey Terminal is becoming a lot more interesting. We have all levels that we can flag at the same time, or just perpetuals, or just spot. Pretty cool. And we have new exchanges joining the aggregated view. We have Deribit in futures as well. Well, this is progressing really fast. As you can see, at 122 is where they're placing their resistance. So I feel like now there is a selling wall instead of a buying wall compared to the past weeks. In the past weeks, this was pretty much upside down, all about support and not a lot of resistance. The resistance starts from 119 with 1K, then we have a fair amount of 800, 700, and then these two heavy levels that aggregated give like 3K at around 122. On the lower end, we just see that 118 currently being a heavy support, but right after that, we only see 700s, 300s, nothing above 1K, and it's pretty empty this area around here. Of course, that can change anytime, but it's a good observation to keep in mind. Also, the percentiles of the deviations below the price, we can see that is more shifted towards resistance. Ask liquidity because it's very dark. Areas where it's very light, it means that we are at the top of the percentile, meaning that there is a lot of orders below the price holding it. On all the views, pretty much we see that. Here we can see it at all deviations, 0, 1, 1 to 2, 2 to 5, 5 to 10, 10 to 20, and 20 and more. Pretty much all of them, we start the day in the red. And there is a clear shift. As you can see here, we are noting the bid-ask ratio between 0 and 5, and it's been all this time with decent support, and for the first time now we are at minus 0.07. What does that mean? Well, there is a shift, okay? Don't take this as a alpha that you can use by itself. Oh, the order book shift to orders on the top end, I'm gonna take a short with them, and suddenly it changes the next minute and you're screwed. It needs to match and pair with other things, with other bias, otherwise it's just a trap because it can be just manipulation. This is the liquidation level that we hit yesterday. We have one now lower at 114.5 and one equivalent at 121. So if market maker wanted to go in here and liquidate that, they already have position orders to then hold that level down and push it back down if they wanted to, and at 114 they also have some orders to defend that to stay in the range. And none of these extreme levels of volatility have played out yet. We still remain in the same area. We put a higher low and we went back to the same levels where we started. We put a new fair value gap below the price up until 118, and that's it. We clear just fair value gaps, very thin, very close to the price, and we are not doing anything about the 121 yet, neither anything with the fat one below the price. Let's have a quick look at general markets and then let's wrap up my views for Bitcoin in the next days or hours. And if you want to trade this one, make sure that you join my trading competition on 2bit. There is literally $3 million if we can climb to the top in the trading competition. There is still 24 days to register. You can win an iPhone, a Nintendo Switch, and more rewards. We can win for different reasons. The trading competition is hosted in this exchange called 2bit, which was built by the same people as Bybit. But this one in particular offers the option to do or not do KYC, which is very convenient. They give you $50 as soon as you register, even before you deposit. Now, if you deposit and start trading with a decent volume, for each amount of deposit and volume, you can get pretty decent bonuses on top. Be quick and join my trading competition, and you are at the same time supporting the channel. Let's have a look at how we closed yesterday in general markets. Pretty much Nvidia is taking all the wins. The rest of the market is not necessarily very happy with what's going on. Let's have a look at how we close on the daily. So yesterday we had a big green candle on Nasdaq, but on the S&P we have had 3 days in the red. On the weekly, this doesn't necessarily look like any damage yet. We are not even taking the previous week low of 628 on the S&P, and on the Nasdaq still with the momentum we are pointing higher. On the S&P daily we are starting to print now some bearish divergences, and on the S&P as well we are against 2 weekly resistance after breaking down. So this is what I call the moment of truth for the S&P, whether we are gonna get a breakout in here or if we are gonna get a rejection and further downside on the S&P. Whereas on the Nasdaq there's still some headroom for a revenge rally second round. We already have one in here, we broke out, and potentially we could get into levels of even 80 on the Nasdaq. Remember that Nasdaq is heavily influenced by the big tech companies that are primarily responsible for all these moves that we are seeing in the market to the upside. And when it comes to the dollar, we're getting very close to our forecast. It's been an impressive week for the dollar. We are at the moment intra-candle putting in a high bullish divergence on the weekly, and we are about to fulfill that target of completing a test of the 21 weekly or the top of the falling wedge, which is our next resistance of $100. You can see how impressive it has been, this move for the RSI. We remain persisting, saying, yeah, it is falling like a knife, the dollar, but the momentum remains defending that low end of 29, and second breakout to the upside. So definitely we saw how this started rolling over, and we started calling for the dollar to stop that move down. We had a scenario in mind of whether we are wrong. We could have continued into 96, but so far we are closer to complete the target of $100 first. Now, if we get into that resistance of $100, can we still get a dollar then pushing back down into bottom of the range? That's still possible. After all, it's resistance and it's decision time. And we are now approaching the final destination of the revenge rally, which is to hit 51 RSI. That's probably going to be in confluence with the top of the falling wedge. This is extremely important, guys, because if the dollar continues to gain strength and happens to have a breakout from these two levels with further upside in here, that is going to slow down risk on assets off and on in crypto as well, at least temporarily, in my opinion. That could be in line with the seasonality of having some downside in August or September. It's not for granted, but better be prepared, because there are some signs that we could be doing that. And finally, the gold has tested the 21 weekly. We've been observing how we could potentially put a breakout from this green line, but so far it's still resistance. And since the moment we topped in here and broke down, that breakdown below the level of 74, we say that is calling for a retest of the 21 weekly. You can go and watch my earlier videos. So far, that's what we have done. Now that we tested that 21 weekly, we need to see if we can defend being above it, or if we are going to cross below and turn it into resistance. So far, all this rally that you can see here, we defend it. Every time that we are about the 21 weekly, we resume with strength into the upside. So whether we're going to get another wave up from here, that will make a little bit of sense. After all, we are in a channel down and testing that resistance multiple times. But same as Bitcoin, I will prefer to reset after bullish consolidation for a little bit longer for a more quality breakout to the upside. Now, it wouldn't hurt to start accumulating at 21 weekly and at some other levels of support, averaging up a potential for resuming upside on gold. Russell is starting to do what we were talking about, the rolling over, the being very close to that resistance. We need now the Nasdaq and the S&P to have also a pullback. And remember one thing, when Nasdaq and S&P were at these very low levels, okay, we're talking about 31st of March, we started seeing both on the Russell and the Nikkei the breakouts to the upside first. S&P did it in June, Nasdaq did it in June, Russell broke out in April, end of April, Nikkei did it around early May, okay? So these two, Russell and Nikkei, are taking now the lead for the breakout. If they started to roll over first as well, like in this way, hitting this resistance, and that is sustained, and we continue 1 week after another week with maybe 2 or 3 weeks of pullback on Russell and Nikkei, don't be surprised to start seeing the same patterns being but being forecasted as a leading indicator on other indices as well. It's all about a wave of rebalancing things. Let's do the wrap up on Bitcoin, and I let you go on this video that ended up being longer than usual. I think on Bitcoin, on the daily time frame is the key. We need to monitor what's going on with this RSI in here, and ideally we want to reset until the bottom end, but we cannot take for granted that we are going to get what is more convenient for a sustained move up. If we see another rejection on this white line and we continue to be sideways on the price action, that means that we are still in the pressure cooker with a bias towards a move up, a breakout to the upside. But if we start seeing that with the move down of the RSI, the price doesn't manage to hold support and we take the past week low, I think that is the critical difference, because if if we go beyond the CME gap that we have below the price, that is definitely calling for going to 110, and that could mean that we are finally seeing that correction for summer that will help align things and make things look clearer for that potential upside. Resetting all those RSIs properly will make a lot more easy to guarantee to get into the top of the range from 130 to 140. If we start breaking out in the next few days in this direction, I will do it a little bit with more caution, following with a trailing stop loss on the risk of being stop out in profit too early. Fine, but this area in here of the breakout is of a higher risk than if we do it from the second area in here once we have finally compressed fully the spring to push us higher than on the other way around. Having said that, I am interested in longs below the past week low, and I am interested to adding in shorts if we get over 120s. 125 and beyond that level is a sweet spot for me to add to my short. Below past week low is a sweet spot to add to longs. I am still holding the largest amount on spot, so my spot position is still there, and the short together with the long are hedging pretty nicely. Thanks so much for watching. Remember to hit the like and leave a comment down below. That definitely helps the channel, and I'll see you in the next one. Take care. Bye bye.